Hey guys, welcome back to the channel. In this video, I'll be answering your questions from a recent Q&A post. I'll be covering everything from Alibaba's earnings to the future of Berkshire Hathaway without Warren and Charlie at the helm. I just want to give a big thanks to my German friend Rudy for asking these great questions, and I'll try to answer them as best as I can. And as always, if you enjoyed the video or learned something new, please consider hitting that like button and subscribing to the channel. So the first question is kind of a two-part question, which I'll answer together. And that is, what does the future hold for Berkshire Hathaway with Greg Abel as CEO when Charlie and Warren retire? And do I expect many changes to Berkshire's stock portfolio with Warren's proteges Ted and Todd managing the portfolio? So for starters, it's worth mentioning how Berkshire is currently operated. Berkshire can be thought of as three separate businesses bundled into one mega business. The three arms, I guess you could call it, of Berkshire's businesses are the insurance businesses, the non-insurance businesses, and the stock portfolio. And each of these three arms have their own manager that oversees the operations. The insurance business consists of other independent insurance businesses that Berkshire bought outright, such as Geico and General RE. And they also have other insurance businesses that Berkshire created themselves. This arm of Berkshire's business is ran by Ajit Jain, and his only job is to oversee the insurance side of Berkshire's businesses. The non-insurance business is all of Berkshire's other businesses that aren't insurance related, like See's Candy, Duracell, and Nebraska Furniture Mart. And this part of Berkshire's businesses is ran by Greg Abel, who is the person that will be taking over as Berkshire's CEO when Warren retires. And finally, we have the stock portfolio, which is the part of the business that Warren manages himself with his partner Charlie, as well as his two proteges Ted and Todd. There's a little snippet from an interview here where Warren explains it all perfectly, and it'll give you an idea of how Berkshire is ran.
You talked about Ajit Jain and Greg Abel saying that Berkshire blood flows through their veins. Have they made a difference since they become vice chairs? And then are they like Warren and Charlie?
No, they don't have the interaction. They each run a separate business inside. Ajit does not think about the other businesses. He thinks about the insurance business, and Greg does not think about the insurance business at all. And I think about the money and the capital and so on. But they're running two very big businesses. I mean, Ajit's business, has a couple $100 billion of assets, and Greg's business has $150 billion of revenues. I mean, they both would fit up there toward the top 10, or so in the country in terms of value. So, but they're very big businesses.
But they're not exactly like you two guys. It's not.
Oh, no. Right. Charlie and I have a partnership thinking about the whole place, and we've done it forever, and we still do.
And Todd and Ted? I didn't see them mentioned.
Well, they have $13 billion each, including pension funds that our pension funds that they run, and so of the $173 billion we had at year end in equities, we had 173 bucks. We had another $8 billion in pension funds. So of the 180 or so, they had 26 between them that they're managing. And they got total discretion on that. They don't ask me. At the month end, I look and see what they did. They don't do much. They don't do a lot of trading or anything. But I look to see what changes they made.
So hopefully that gives you a pretty good idea of how Berkshire will be ran when Warren retires. Essentially, not much will change. Ajit will continue to oversee the insurance businesses on his own, and Greg will oversee the non-insurance businesses as CEO. And all the extra capital that those businesses generate will go to Ted and Todd to deploy in the stock portfolio or to buy new businesses. Like Warren mentioned before, Ted and Todd don't operate as a partnership like him and Charlie. Rather, they both operate individually, and they both manage around $13 billion each. And I honestly have no idea if that'll change when Warren leaves. Maybe they'll work together as a partnership, or they might continue to work separately and they'll manage half of Berkshire's portfolio each as individuals. Now, to answer your question, I don't think Ted and Todd will rock the boat that much when they take over the portfolio. Sure, they'll make investments in other types of businesses that Warren probably wouldn't buy. But from everything I've read, both Ted and Todd are amazing investors in their own right, and they're both very similar to Warren.
And now we're all set, and they're handling $10 billion each. When we started, it was maybe $2 billion or so now. I've added capital to it, but it's one of the best decisions that Charlie and I have ever made was bringing these two on board. It's looking at what they had done, and how they had done it, and what kind of people they would be. I mean, I want somebody that I'd be happy if they were marrying my daughter, and It's a similar type of situation. I mean, there can't be any question about character.
In many ways, it doesn't change much from my prior world where I ran a fund, and I've always been kind of a one-man band analytically, and kind of our day job is reading, and I spend the vast majority of my day reading. I try to make about half of that reading random, things like newspapers and trade periodicals.
And what's your day like then? How do you...
I get in around 7 or 8, and I read until about 7 or 8 at night, and I go home and see my family, and then I'll read for another hour or two in bed at night. And you know, there might only be 3 to 4 phone calls the entire week, so there's very, very few interruptions. I have a great assistant who knows everything that I read, and she kind of provides everything, and there's a back and forth between us where I'll mark it up and give it back to her, and we have a system for filing and so forth. But it's literally just reading about 12 hours a day of everything I just mentioned.
Charlie describes himself as a book with legs.
And
These are the only 2 guys we could find that read as much as we did.
I always talk about, you know, learning to learn and being lifelong learners, and you know, that's something that impacted me because I started to read about that when I was in college. And you know, I looked in the last 5 years for me at Berkshire, and they have been the steepest learning curve of my life, and that's pretty powerful to say when you're 50. And it's been a lot of fun, but it is that data set that you get exposed to of all these different businesses, all this information, and as Todd said, taking that friction out of the equation. I loved my investors when I ran a fund, but it takes time to talk to your investors. It takes time to write the quarterly letters, that sort of thing. That's gone.
Ted has quite the backstory that proves his prowess as an investor. Over a period of 29 years, Ted grew his retirement accounts from 70,000 to 264 million. An absolutely insane compounded annual return of 33%. That's an absolutely incredible record, and it's clearly obvious why Warren took an interest in him. Todd's journey wasn't as straightforward as Ted's. When he was hired by Berkshire in 2010, he'd only been a fund manager for 5 years and only achieved an 8% compounded return. But I think what Warren and Charlie saw in him went beyond an arbitrary investment record. They saw a kindred spirit and someone who was extremely similar in personality and temperament to Warren and Charlie. It was actually Charlie who first met Todd after Todd reached out to have lunch with him. Apparently, what was supposed to be a short lunch meeting turned into a conversation that stretched for hours. Afterward, Charlie recommended to Warren that he meet this young man, and the rest is history. I think Todd was hired not for his investment record, but for his incredible intelligence and a personality that was 100% fit with Berkshire's culture. So overall, I think the Berkshire portfolio will be in great hands when Buffett leaves. I'm just not sure if they'll work together as a partnership, or they'll work separately as individuals, but it'll be interesting to see. The skeptic in me thinks that they obviously won't be as good as Warren and Charlie. But to be honest, I don't think anyone will be for a long time. But these 2 guys have been shadowing Buffett for years. And from everything I've read, they're the exact same personalities. They just sit and read all day like Buffett. And now and again they get together for lunch to discuss ideas. In time, maybe they will be as great as Warren and Charlie. Perhaps even better. Time will tell, and I wish them all the success in the world. But to answer your question again, I think they will add new types of businesses, but I don't think the overall portfolio will change that much. Alrighty, the next question is around ETFs, and is one broad market ETF enough for a portfolio? The immediate answer is yes. One broad market ETF is perfectly fine for a passive portfolio. Especially because the ETF that you sent me is a world ETF with exposure to many different countries, but the majority of its holdings are great high quality US companies. The top 10 holdings are all quality businesses like Apple, Microsoft, Amazon, Tesla, Nvidia, Taiwan Semiconductors, and Berkshire. This might be controversial, but I think a lot of people, especially passive investors, stress way too much about what ETFs to pick and how many to buy. Remember, the whole objective of passive investing is to be free from bother and just participating in the general market. All passive investors need to do is just buy 1 or 2 broad market ETFs and then dollar cost average over time. I think the most important thing a passive investor should worry about is minimizing fees, and that could be management fees or brokerage fees. Fees will be the #1 thing that destroys your returns over time. So the only thing you should worry about is how to minimize fees as much as possible. Something you could do is, if you're dollar cost averaging, instead of buying shares every month, buy shares every 2 or 3 months, and that way you'll pay way less in brokerage fees over time. The next question is, what do I think about crypto and Bitcoin in particular? I just want to start by saying by no means am I qualified to talk about this subject in detail. I do have some rudimentary thoughts on Bitcoin, but I'm just some Irish millennial dude on the internet, so take this with a grain of salt. So I don't really have an opinion on other cryptos because I don't really understand them, but I do have a basic understanding of Bitcoin. With any subject, I try to be as objective as possible and analyse both sides of the argument, the pros and the cons. I do see Charlie's point that the technology surrounding Bitcoin is a breakthrough, but the actual trading that goes on with Bitcoin is pretty speculative. That it's based on another person paying more than you did down the line, and not on the actual appreciation of the underlying asset. In saying that, I can also see the perspective of Bitcoin bulls, who say that a peer-to-peer decentralized monetary system can change our whole monetary system forever. To me, as sort of a crypto noob, I see Bitcoin as sort of a decentralized digital gold that has a limited supply, and it's something that the government can't seize like Roosevelt did with gold back in the 1930s. I was having a chat in the comments the other day with another subscriber, Chris, and we were saying how we both had pretty much the same idea when investing in Bitcoin. We just allocated a very small percentage of our wealth with no expectations whatsoever. If we lose a couple of grand, whatever, but if it does well, we could make a pretty decent return. So I think it's fine to have a small percentage of your portfolio in something like crypto. Other people can do what they like, but for me, my style is to buy wonderful high quality businesses. And I much prefer that than trying to pick the next hot crypto. If there's someone watching who knows way more about crypto than me, please hit me up in the comments below, because it is a topic that interests me and I would like to learn about it. Alright, the second last question today is why international stocks such as BYD don't show up on Dataroma when you're looking at Warren and Charlie's portfolios. I've been doing lots and lots of reading about this, and essentially what I found is this. If Warren or Charlie or any other investor buys a stock from an international exchange, they're not required by law by the SEC to disclose it. So I think the best way to find out about stuff like this is straight from the horse's mouth. Charlie has spoken about owning BYD many times. I don't know if he owns it in the Daily Journal portfolio, his personal portfolio, or both. But if I had to guess, I'd say he owns it in both of his portfolios, but it's only a small percentage of the overall portfolio. I'm like 99% sure he still owns these holdings, because he said something recently about having to pay a massive amount of capital gains tax if he sold. So he's planning on holding for the foreseeable future. I'm also like 99% sure that Warren owns BYD in the Berkshire portfolio as well, but he doesn't disclose it because he doesn't have to. For those who don't know, BYD is a car manufacturer in China that specializes in electric vehicles. And based on recent data, they're actually one of the biggest EV manufacturers in the world today. So to answer your question, I think the best place to get this information might not be from the 13 Fs, but straight from the source. But I do know it can be difficult because there's investors like Monish Pabrai who don't really like to talk about what they currently own. So it can be difficult to get this information some of the time. Alright, last but not least, the last question today is around Alibaba's earnings. Unfortunately, I was really hoping Alibaba would release their earnings before I made this video so I could go through it with you. But alas, Alibaba decided to release it next week instead. So instead, what I'll do is we'll look at the estimates for the earnings to see if we can predict what they'll report next week. If we look at Alibaba's revenue on hypercharts, if you look carefully, you might notice a little trend here. Every couple of quarters, Alibaba have standout revenue compared to the other quarters in the year. And each of these standout quarters are all Q3. So you have Q3 2018, Q3 2019, Q3 2020, and finally Q3 2021. So odds are with Alibaba about to report Q3 2022, more than likely they'll post some really good numbers and have another standout quarter. I usually don't pay too much attention to analyst estimates, but if we look at the ticker estimates, they're saying Alibaba will do nearly 39 billion in revenue, which on the chart will put it somewhere up here. So even though the stock's been getting battered, the company are still posting really strong numbers and are still managing to grow revenue significantly. If we look at the full year estimate, Alibaba are still growing revenues by 20% a year. Now with Alibaba, operating income and free cash flow are a little harder to predict, given the recent fines and the prosperity tax imposed on them by the government. But I think the uncertainty is pretty overblown. People look at the previous year's cash flows and say, oh, their earnings and cash flows are down, the company must be dying. If we take a step back and look at it over a longer time period, it tells a different story altogether. Here's a little mathematics fact to keep in your head for times like this. If a number doubles in 5 years, its compounded growth per year is 15% a year. So if you have 10 billion in earnings and 5 years later it's now 20 billion, then you grew it by 15% a year. So if we look at all the various earnings figures from 2018 and compare it to the estimates for 2022, It actually looks really good despite the drop from last year. The revenue looks incredible, so we'll ignore that and focus on the others. So EBITDA, which is basically operating income, has went from 10 billion to 25 billion in 5 years. If we look at EPS next, again it's grown from $2.50 to over $5 per share. And finally, we'll look at their free cash flow. Their free cash flow has grown from 10 billion to 22 billion. So overall, despite having some recent bumps in the road, Alibaba have still executed really well over the last 5 years and have still managed to grow every important category by more than 15% a year, despite their massive size. So overall, I still think Alibaba is a great business, and I'm happy to hold on to my stock despite the recent drop in price. In the question, you asked about Munger too, and I think he has more insight into China and Chinese companies than all of us, unless you're Chinese or have Chinese friends. His relationship with Li Lu gives him a huge advantage in understanding Chinese companies and the overall Chinese market in general. And I'm nearly 100% sure he wouldn't triple down if he didn't have huge faith in the business. So no, I don't think he's wrong about Alibaba by any means. But we both could be wrong and no one can predict the future. So that's it for the questions today, and I just want to say thank you again to Rudy for asking such terrific questions. If you've enjoyed the video so far and you want to support the channel, I'd really appreciate it if you hit that like button. And if you want to see more videos like this one or join our little community, hit that subscribe button. And if you're still bored, I'll put another link to a video up here that I think you'll like. If you've watched the video all the way to the end, thank you so much and I really appreciate you watching. As always, if you have any questions, please don't hesitate to let me know in the comments below. I reply to every single question. If you're new to investing and you want to know how I invest using the Buffett-Munger framework, or if you just want to download and use my intrinsic value spreadsheets, then check out the free course on the channel. And as always, this video is not financial advice. Please always do your own research before making any investment decisions. So that's it for this video. Thank you so much for watching and I'll see you guys in the next one.